It's Brian Shannon from AlphaTrends.net. Today is Saturday. It's the 14th of April, and we've got a long weekend. It's time to think about what's going on with this market because we saw some pretty broad-based selling this week. And, I noticed personally in some of the trades that some of the short sales are starting to follow through more so than we've seen in quite a while. So let's take a look at these numbers. The S&P was down a little more than 1%. Semis got hit the hardest. They had been the leader, but now the NASDAQ is ahead of that. The Russell 2000 is currently down year to date, as is oil and banks and the dollar. So let's take a look at the charts and make some sense of this action. We'd been cautious about this market because it was below the volume weighted average price from the peak back here, and I've been referencing that. And then the volume weighted average price from this washout low a couple weeks ago, we were stuck below that. And of course, as I always mention, the declining 5-day moving average. Well, this week, of course, we saw that we finally, it took a little while, but we did get some better momentum to the downside. And as long as we're below a declining 5-day moving average, the intermediate term trend remains guilty till proven innocent. And this is looking like 2 weeks ago that we had an event that was from that failed move to follow through came a fast move lower. And I think there's still downside risk from here. So there's that volume weighted average price from the peak and why we'd been talking about 236.50 in this level as not only breaking above, but it needed to hold above there. Now we're below the 50-day moving average. It's still advancing, so that's something to keep in mind. But these are the first two closes since the election that we've seen below the 50-day moving average. So taking a look at the year-to-date volume weighted average price, if you saw Wednesday's video, I thought that we were going to get down there, and we did. We came down to and closed below that. I think the next significant level that we really want to emphasize is the volume weighted average price since the election, and that currently is down at about 228.5-ish. And I think that before this selling is over, we might in fact see that. Now, one scenario for next week is that perhaps we just slightly undercut this little low here, and then or maybe a nice bounce, and then a bounce, and then we continue lower to test that year-to-date volume-weighted average price. Right now, though, as we are going into next week, we're guilty till proven innocent, and we closed right on the lows. Maybe we get a little bit of a bounce. I would be highly skeptical of bounces and looking for short sale opportunities in the S&P 500 if we do get such a bounce. The NASDAQ is right down to its 50-day moving average. If we take a look at the year-to-date volume-weighted average price, that's still down just under 129, and I think that a lot of people, myself included, are looking at this as a first level of potential support near about 129, 129 and a quarter. And one scenario there is that we break down through that down to the year-to-date volume-weighted average price, then bounce. And if we start to see this 50-day moving average roll over and hold as resistance, then it might signal something different, bigger on the downside projection. For now, though, we're looking at this as a correction within an overall uptrend. And, if we were to do this type of scenario where we break down and then find resistance at the 50-day moving average, then we would start to look at the volume-weighted average price since the election. The Russell 2000 has been stuck in this neutral range, and it's really, we're spending more and more time with these lower highs and more repeated tests of support, which is not a good sign at all. The volume weighted average price since the election here, you can see we have just closed below that for the first time since the election. That's not a good sign. It tells us now that as far as the Russell 2000 goes, the so-called Trump rally is over because the average participant is now in a losing position if you've dollar cost averaged throughout all this volume. Now, of course, there's a lot of people who are still in a profitable position because of that, but the average price is currently higher than where we are. And this week we saw resistance at that 50-day moving average, which is flattening out. So backing it up to a weekly time frame, we do still have longer term, the 150 and 200-day moving average heading higher, but perhaps we go down and test that in these prior peak from this midpoint of last year would bring us down towards 129. Looking at a 65-minute chart, 65 minutes, of course, because there are 6 candles each day of equal length. If you're looking at an hourly chart, you're looking at 7 candles One of them only represents a half hour. Six of them represent 1 hour. So using a 65-minute time frame, there are six candles of equal length, which make your moving averages in any study more accurate. So let's actually look at a 195-minute. So basically that would mean there's two candles per day here. And if I'm looking at a 20-period moving average, that means a 10-day, a 20-day, and I'm pointing up here, and the 100 period, when there's 2 periods per day, that's the 50-day moving average, is that green line right there. We have this potential band of support in here. Last time we broke below it, it was just a quick breakdown through and then rally back up, but we're seeing lower highs, and I'm not sure we're going to get the same type of bounce again. This market may lead lower with a flush down towards this level. So going into next week, I'd say a lot of caution. Now, we've got earnings season right now, and the financials, XLF, not XLG, the financials have broken down below the volume weighted average price since the election. That's not something we want to see. This is still a level of potential support, but if you look at the XLF right here, this could be a shoulder, this could be a head, and this could be a right shoulder. And if that's the case, we're right on the neckline, and that would imply a move down towards 21. So time to be very cautious in this market. We're below a flat 50-day moving average. We're making lower highs and lower lows. We saw a lot of earnings this past Thursday, rather, and initially on Thursday we gapped down and rallied up, but with that declining 5-day moving average, it says you cannot trust the rally attempts. So the financials are in a precarious position here. Maybe we break down a little bit, get a bounce, but I would be highly suspicious and would be looking for this volume weighted average price since the election to offer possible resistance. So keep an eye on these banks this week, because obviously they're a big part of the S&P 500, and if they fail, it's going to have a big effect on the S&P 500, similar to the semiconductors, which have a big influence, of course, on the NASDAQ and technology stocks, as technology stocks need semiconductors, or technology products need semiconductors to run. We've got a couple, we've got that trend line there. We are currently right at the year-to-date volume weighted average price. So potentially, we flush a little bit and then bounce from here. But I think that the nature of the semiconductors is starting to potentially change. If we bounce up towards this level, find resistance at the 50-day moving average, I think a test of that trend line is highly likely. And since the election, it's not as big an event, but it's close to that 73.5 level here. So again, going into next week, we're below a 5 and 10-day moving average, and we've come off pretty hard this week as we broke that important level of support near 78.25 to 78.5. Now, if that acts as resistance, then I think it means that these semiconductors are going to at least need some time to digest. I mean, as we know, this has been a huge winning group the last year and a half, and for some pause or further price correction would be absolutely normal. Now, the biotechs this week actually gained a little bit of ground. Granted, it was only 2 basis points, but it did show some strength here in this sector, and we can see that on this weekly chart, it's looking like it's basing out. We've got a rising 10, 20, 30, and 40-week moving average. And that is a good sign that the buyers are, on the longer term basis, are starting to reclaim control, and it's at least neutralized in here. Going down to a daily time frame, we've got a couple important things here. Let me resketch them in, which is, one, we've got the year-to-date volume weighted average price, which has been holding as support. That year-to-date volume weighted average price also comes at the January peak. So this prior resistance, in other words, is offering support. We do, however, have a rising 50-day moving average, is declining 10 and 20, so it's telling us there's mixed messages in this market. Let's go down to a 65-minute time frame, and you can see there's that year-to-date volume weighted average price, and of course we've got a pattern here of lower highs and finding support. Now, if we can get maybe beyond about this level here, 293-ish next week, if we can kind of do something like this, rally up, pull back, and then it could be in a position to move higher. Right now, the jury's still out. We're kind of trying to find support. I know that if we break down below 286 and hold below there for more than a half hour or so, then things could get ugly. So keep that in mind. I would say start to pay a little bit more attention to these biotechs for the potential that it breaks that trend line, pulls back, and then find some momentum beyond what's been this little resistance over the last couple of weeks. So that's what we would like to see. We wouldn't want to chase a break beyond 294. Instead, we want to see it rally up, pull back, turn sideways, and then as we get strength, we would want to be a buyer somewhere in this area with a stop perhaps underneath the rising 5-day moving average or whatever this higher low might end up being. The shares of Apple are starting to show some signs of weakness as well. The volume weighted average price since the event, that is the most recent earnings report, I think that that's a very likely area of better potential for support than if we break below the 50-day moving average. We'll see, if we break the 50-day moving average and come down to the year-to-date the volume weighted average price from the earnings, then I think that's where a bounce would ensue, not at the 50-day moving average. A lot of people, I think, will try to buy that 50-day moving average, but again, we've got a declining 5-day moving average, and that tells us in the intermediate term we're guilty till proven innocent, and for that to change we need to get above 143 and a half. Right now we're looking at that area as this prior support has the potential to become resistance. The bonds had a good week, and I've been talking about how they've been range bound. Now they broke beyond that range. So does that mean we're in a new uptrend? Possibly. I mean, if that's your thought, then a stop would go somewhere maybe underneath that 50-day moving average. My thoughts on bonds are we're still in a longer term decline. We're at a 30-week moving average right now, and it's more likely that let's get back to a daily time frame. To me, it's more likely that if this market's going to rally, you don't buy this breakout here because it's just come from 121 to 123 and a half. Instead, you look for a pullback, and if this little band of resistance in here can hold as support, then perhaps we continue to move higher. My feeling is it's more likely we're going to drop back down into that range. I don't trade bonds, so I'm not really too concerned about it, but as I said, this past week we had some nice trades on the long side as well. In MLCO, we got involved in this one at about 1910. We're still holding a piece of that. We're involved in ZEN as well on the long side. But on the short side, we got involved in Ambarella right over here where this line is, and we're still short a portion of that. So we're going to keep short that with a stop currently at 51.55. So a nice 3 points downside there. And this Tempur-Pedic that I've been talking about finally breaking down, and it's a new closing low not only for the year but for the last several years. So there can't be many longs feeling good about owning Tempur-Pedic, and that's got some great downward momentum. We got involved on the short side over here, and we're still short some with our stop is currently 42. We're short Snap. That one's still working for us, as is GWR. This one we shorted I believe right over here a couple days ago, and we're still short part of that. It's got a great looking daily and weekly chart for a short side, that is. Here we are breaking down. So, there's still good opportunities out there. Some of the names we're going to be looking at more in detail for subscribers would include Baidu. Look, it's been in this triangle for the last year and a half. It's right at that midpoint where all these moving averages are meeting up, and then if we go down to a daily time frame, you can see it's been stuck below the year to date. That's that purple volume weighted average price, which is also the 50-day moving average, and we go down to a shorter term time frame, it's looking quite vulnerable. This is going to be on our watch list as something to potentially short, as will Buffalo Wild Wings, which is, the volume weighted average price since the IPO is still holding that. So I think that if we break below this low over here, if there's a good risk reward, we'll be looking to short that. We'll be looking at eBay on the long side. We'll be looking at IBKR as a potential short. Manhattan Associates, this is a good looking potential short as well. On this weekly time frame, we're below a declining 10, 20, 30, and 40 week moving average. On that daily time frame, we've just broken down. Let's go to a 30-minute time frame. You can see that we broke down pretty hard here and then rallied up, and that's the beauty. That rally up tells us, we don't want to be the one who shorts down here. We want to short maybe below this level with a stop above here. Each day I give very detailed analysis of where the stops should go and what our risk is and where the potential opportunities are, long and short. New Skin and US, here's a potential upside trading stock, and that's something I'm going to get into in a video for subscribers. Hope you enjoyed this video. If you did, share it with your friends. Thanks. Enjoy your long weekend and talk to you next week.